The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the week ending 26 May 2023. Well, if you don't know by now, we have talked about this over and over again. And right here at the beginning of this paragraph, when will the next major collapse happen? It's actually happening. There's a lot of conjecture what will happen this 3-day weekend. I'm going to comment on that to the premium members here. I'm not all that wound up about it. There are a lot of people that are, and certainly they could be correct, but on my basis, I don't think anyone knows for sure. Silver has an interesting last month. Silver hit a high of just over $26 early May, and here we are at the end of May, and it's sold off to $22.73. It popped up on Friday, so lost about $3, and gold has not performed as well either. So in the last 30 days, gold hit a high of about $20.50 and recent low of $19.41. So gold has dropped more than $100. And both of the metals are doing what I actually expected, which is the summer doldrums. That doesn't mean that they will not pop immediately, but it doesn't also mean that they will. What I'm trying to say is this. Normally we get a discontinuity between what reality is in the financial markets and what the gold price and silver price movements are. There's usually a delay, and oftentimes people are faked out, thinking, well, this just happened, this bomb went off or this catastrophe took place, and therefore gold has to move. It doesn't. There's a lot more behind the scenes that anyone that listens to this show or this channel would understand. And therefore, a lot of the movements in the precious metals are actually very difficult to determine. On balance, gold is doing its job. Gold is pushing toward the 2,000 mark. It did hit a recent high. It's backed off, as I just said, and I do expect further performance out of both the metals this year, but nothing spectacular unless or if and only if we do have a huge financial catastrophe, which at this point, I don't see it. All right, first up from Russia today, Russians encouraged to ditch dollar for gold. Gold ingots up to 20 grams may now be purchased from the Moscow Mint website. You can read the article. It's not very long. I always find it interesting that, the banks, which were at one time backing or warehousing physical metal, and you would get basically a warehouse receipt or a certificate that was exchangeable for money. Of course, that's been gone for quite some time. Nonetheless, I always found it interesting that the banks in the United States don't do what the banks in South America do, which is they have these little cards, these little things that are about 5 inches by 3 inches, an A fold, and it just shows you a gold coin and a silver coin. And you can actually buy gold and silver over the counter at a bank. And it's always been in my imagination, if they had that in the United States, that many people that are unaware of the precious metals, if they saw that at their teller window, might be inclined to at least investigate, if not make purchases. But the banks aren't going to push gold and silver. We all know that. This is from Fortune magazine. In a lot of the world, the clock has hit midnight. China is calling in loans to dozens of countries from Pakistan to Kenya. A lot of people don't know if you want a really big credit contraction and you have a callable loan, which means the bank can call it at any time. So you borrowed $1 million and it's callable. The terms were it's good for 30 years, but it's still callable. And the bank says, okay, we're calling the loan. We need $1 million or you lose your asset that's backing this loan. And that is a huge credit contraction. So I don't want to overstate this, but I certainly want people to be aware of it. And just read a little bit here. A dozen poor countries are facing economic instability and even collapse under the weight of hundreds of billions of dollars in foreign loans, much of them from the world's biggest and most unforgiving government, China. An Associated Press analyst of a dozen countries most indebted to China, including Pakistan, Kenya, Zambia, Laos, and Mongolia, found paying back that debt is consuming an ever greater amount of the tax revenue needed to keep schools open, providing electricity, paying for food, etc.
There is nothing more critical to your financial future than a sound money system. This is the premise of the Morgan Report. To understand where you are going, you need to know where we've been and why our current monetary system is crumbling like a house of cards. More importantly, you need to know how to build and preserve your wealth even in these uncertain market conditions. You need a strategy that will protect whatever amount of savings you have now. We are going to witness the greatest transfer of wealth that has ever occurred in recorded history. Will you be in when it happens or sitting on the sidelines wondering what just happened? Join our free email list at themorganreport.com. Become informed, awake, and aware.
So, I don't want to contradict what I just said a moment ago, but what I do want to reaffirm is that the credit contraction is taking place. The world physical economy is contracting. Inflation is pretty much built in from this point forward on things we need, i.e. food, water, insurance, fuel, that type of thing. Real estate's a little more nuanced because there's such an overbuild in the commercial side, and with interest rates high and most mortgages being the only way people obtain real estate. So that looks weak to me, at least in North America. Nonetheless, be prepared for a contraction, in other words, a lower standard of living almost everywhere. This is from investing.com. Silver dropped as expectations grew that the U.S. Fed will keep interest rates higher. This is poppycock. I mean, that's the headline. I'll read it as it's stated. But really, interest rates matter if and only if they're above the true inflation rate. And the true inflation rate is, I forget the official number. I haven't looked. Probably 5 or 6%. If you go to shadowstats.com, it's more like 12. So they like to play this game, and they like to make everyone think that, higher interest rates are bad for the metals. They really aren't. In fact, taking a thought experiment and taking, let's say, the interest rates to a Volcker type of situation, which in my view will never happen, but just thinking about it, if we put interest rates above the true inflation rate, so let's call it 10%. Let's say John Williams is a little higher than the reality, which I'm not saying, but let's just use 10. It's easy to do in our head. And that number gets taken by 3 or 4 points. So you got a 14%, which means you have a 4% real return on your money. That's what happened in 1980, except it was a lot more than 4%. Official inflation was 13, and Volcker pushed the rates up to about 20, which is a 7% real return. Couldn't do it this time. It's impossible. But I'd also question it this time, meaning, do you really want to get paid back in these dollars? What are they going to be worth? And that's the crux of the issue. You know it, anyone listening to this channel or others like it are aware of it. And we are in the end game. The end game meaning that the banks don't have a lot of room to wiggle out of this anymore. Sure, they can print and print and print until the currency collapses, which is unlikely. I think there'll be a new system enacted before that. And you have counterbalancing forces. If you have a huge contraction, I just outlined from China doing callable loans, that contracts the credit system. And if you have to push interest rates higher and you have to sell at par or the market price because you have to liquidate to meet deposits, which is happening throughout the banking sector, that also is a contraction in the credit system. So there are countervailing forces. And to countervail that, you print. So we are in, let's say, a very interesting time frame. It's been this way throughout history. This has happened before. It's just never happened at this scale. U.S. News World Report, banks win dismissal of U.S. silver price fixing litigations, produced by Reuters. U.S. judge on Monday, this is the 22nd of May, when this was published, dismissed a long-running litigation by investors who accuse HSBC Bank of Nova Scotia for conspiring to fix silver prices. The litigation began in 2014, and Deutsche Bank settled for $38 million 2 years later. In the 24-page decision, Caproni found that investors unable to trace their losses to banks' alleged effort to depress the fix would set benchmark prices for silver bars and trade derivatives based on advanced knowledge of the fixed price. Investors did not show it was plausible, as opposed to merely possible, that distorted pricing affected their trades, and said any damages were too speculative. The judge also said that investors were not efficient enforcers of their private antitrust claims, unlike persons who might have sold silver at the fixed price. Interesting. Now I will end with platinum this week. This is from barchart.com. Platinum. The bullish trend reaches a critical point. It's a pretty good article. It's not really that long. Lots of charts. You can see that we're in a consolidation, and we're near the top here. And they makes a big case for platinum not being as liquid as gold or silver, which is true. Technical breakout could lead to an explosive rally. and talks about one of the more liquid ETF products available for platinum, which I'm not that favorable to ETFs, but if you are, go ahead. The PPLT is the one he's referring to. I'm still bullish platinum. I'm still on the long trade of long platinum and short palladium, and that's working well. And I decided to finally finish this off with one more thing, and that is what the sector has done so far this year, which you may be interested in. So aluminum's off 5% for the year. Cobalt is off 43% for the year. Copper's off about 3.5%. Lead is down 12%. Nickel's off 30%. Tin is flat. And zinc is off 23%. Gold is up 6.7%. Palladium is off 21%. Platinum is off 4%. Silver is off less than 3%. So it's very interesting that most of these base metals and even the precious metals are off from the beginning of the year until now. And the gold-silver ratio has gone from 76 to about 83 currently. I just returned from a trip to the Silver Valley on Monday. Saw a silver property, set of properties actually that are quite interesting. I'll be writing about it in the premium membership, not this month, but the following month. And they also have actually some lithium prospects in Mexico that are rather interesting as well. So it looks like a good speculation to me. I will be writing about it for our premium service in the near future. That's it for David Morgan, morganreport.com. Until next week.
What if I told you that you could go broke in less than 24 hours? That's how long it took for the Dow Jones Industrial Average to plunge by nearly 22%, losing investors billions overnight. The same happened to the FTX crypto exchange and Terra Luna stablecoin. Both crashed overnight, losing crypto investors billions. You need a strategy that will protect whatever amount of savings you have now. We are going to witness the greatest transfer of wealth that has ever occurred in recorded history, and you must understand the following. You can absolutely go broke in one day. We've been helping subscribers weather this economic mess for years. Now it's time for you to get the same insights. What really happens during a major collapse is that the wealth changes hands. You will actually benefit by looking ahead and knowing exactly how to build and preserve your wealth. Putting just 10% or 20% of your wealth into our approach could make all the difference in your financial security and peace of mind over the next few years. Discover the Morgan Report today. Visit our site at themorganreport.com.